on the AI spending cycle. And with that, I think it's a good time to turn things over to Matt, provide additional insight on some of the things we're keeping a close eye on as it relates to AI. So Matt, where are we in this cycle, and are we seeing any scenarios where companies are really getting a return on these significant CapEx investments in AI?
Yeah, great, Brian. Appreciate it. So yeah, we've talked about artificial intelligence at each of our last two strategy update sessions. And our message has been that we viewed AI as a long-tailed investment theme and that it was important to have adequate exposure to it in client portfolios. As we speak to you today, we remain bullish on AI as the investment theme is strong and, in our opinion, has been the best underlying fundamental growth story in the market year to date, and a significant driver in the market's recovery over the past several months. Supporting this is the strength in recent corporate earnings reports for companies most exposed to this theme, such as NVIDIA, Broadcom, and Oracle, to name a few. While it's always difficult to predict where we are in any technology innovation cycle, we feel that we are still in the early stages of what looks to be a long cycle. As you can see in this chart, technology cycles historically have been measured in decades, not years. Focus over the last several years has largely been on the AI infrastructure build-out and AI development, including things like data center construction, networking, procuring the most advanced processing chips, and securing power to make it all run. Some of the biggest beneficiaries and best investment opportunities have been companies that provide this infrastructure. Again, NVIDIA is an example, Alphabet, Arista Networks, Constellation Energy Group. All of these companies are deeply involved in the infrastructure that's needed to support AI. While we expect the infrastructure companies to continue to benefit and to be important participants in AI development and growth going forward, as can be seen on this chart you're looking at, we are seeing a growing investor interest in how AI will be used to create business value and drive new revenue streams. I talked a bit about this a couple years ago during our strategy update session, but at that time it was more conceptual than tangible. But today it's becoming a reality. AI investment continues to outpace AI benefits, but that gap will narrow over time. And as an investor, we are looking for these second derivative beneficiaries and investment opportunities. We are seeing the AI investment cycle transition from initial experimentation and infrastructure building to actual use cases. The focus now is on deploying AI solutions to solve real-world problems, drive business value, and demonstrate profitability. While not as easy to quantify as AI spending on something like NVIDIA GPUs or Dell servers, we are seeing and hearing from companies that the use of AI is creating efficiencies, driving cost saves, and generating new revenue streams. For example, in a recent interview, Salesforce CEO Mark Benioff said artificial intelligence is accounting for 30 to 50% of company workloads. A second example is Accenture. Accenture, which is a large global consulting company, reported quarterly financial results just a few weeks ago. Their Gen AI bookings were $1.5 billion in the quarter. This was up from $900 million a year ago and basically zero 2 years ago. One of the best examples of how a company benefits across the AI spectrum is Microsoft. Most of us are familiar with Microsoft being an early AI beneficiary, an early infrastructure beneficiary, similar to Alphabet and Amazon. But they are seeing significant benefits beyond this. For example, Microsoft grew its cloud service revenues 33% in its most recent quarter. Of this, 16 points of growth came from AI services. Sales at Microsoft's AI-powered Copilot are tracking at a $3 billion annual run rate. Microsoft's CEO recently stated that 30% of all their coding is being written by AI, allowing them to allocate employees elsewhere in the company and do more with less. Management has also talked about how internal AI-powered solutions have demonstrated significant time savings and operational efficiencies. To conclude, we remain bullish on the AI investment theme, feel that client portfolios should have adequate exposure to this, and we continue to actively research future AI beneficiaries and investment opportunities.